So today is Friday, 24th of July, and coming into the market open today after yesterday, more signs starting to show in terms of the bears being in control and weakness actually prevailing as opposed to strength. The S&P closed significantly below, or significantly in terms of recent closes, below its 50-day moving average, and after this VCP pattern, this tightening range that we had coming into this move that happened yesterday. I did speak about it yesterday in terms of it being a kind of inflection point in terms of showing the market's hand if it would either break out to the upside or the downside. But either way, it would be a clear move in either direction, and it was the downside. So whether or not there's more follow through from this, I think it's just a sign that the markets are at best choppy, but at the same time, the cracks are starting to show in terms of the market actually wanting to push a little bit lower. And the Qs in particular, they're coming into these lows again for the third time, which is this little gap here, but for the third time testing these lows. So I don't want to get super bullish at these lows, but I do believe that they will get taken or at least tested at some point. And when that does happen, I'd like to see them. I guess if they do get taken, I'd like to see a quick reclaim of that level. And if that does happen, then that would be a good sign that potentially this move's done, and there might be a momentary relief depending on what else is happening in the market. At the same time, I could see this being closed below today, or even just I guess getting tested today based on the fact that it is Friday, and the fact that Iran US has been escalating, and it's been going on for 13 consecutive days now in terms of the strikes. And based on what Trump said over the last couple of days, it could get a lot worse. So the fact that that is coinciding with oil closing above 100 a barrel yesterday for Brent, the fact that bonds were also broke out yesterday, in terms of the 2-year, 5-year, 10-year, 30 years, not taking out these highs yet, but everything's just looking like it wants to go higher. So based on all of that, it would make sense that the market doesn't really want to go risk on into this weekend. So the Dow Jones and the IWM are the two indices that are holding the 50-day moving averages for now. The IWM did test it yesterday, but it was just a test and it did close above it. But the fact that they're coming into their 50-day moving averages after I guess not really testing them since they were initially reclaimed back in April. It's a sign, just another sign to pay attention to in terms of things, strength kind of really deteriorating, and actually a potential direction being chose as opposed to the chop that we've seen. So the Kospi also pulled back after the initial relief that it had. I feel like these lows are primed to get taken. The 10-day is holding pretty well as resistance for now, which just shows that there's continued pressure in terms of the AI kind of AI related stocks and semiconductor sectors, which has been holding up the market, or basically was the result of the rally that we had throughout April and May. So just to support that, the fact that Google closed below its 200-day moving average yesterday, a massive red day yesterday, and similarly for Tesla, clear market leaders or mega caps are breaking down. It's usually not the things that you want to see or typically see if the market's going to suddenly start trending aggressively to the upside. This typically happens when things are starting to break down. So the fact that this is happening all whilst there's other signs that are showing the potential weakness does lead me to believe that there is more pressure, more selling pressure to come into the market. Bitcoin was giving me a little bit of hope based on this initial breakout with the 20 holdings as well as it did, but on Wednesday and yesterday as well, is just basically negating any attempt of a breakout. So risk doesn't want to enter the market right now, and that's being supported by oil spiking by bonds breaking out, with what Trump's saying, with stock B primary breadth indicators, the number of stocks down 4% plus on the day yesterday, was back above 300, and the strength that we saw on the 21st, there was no follow through at all. So it's clearly just momentary relief. The number of jobless claims came in softer than expected, the lowest reading since 1969. So again, doesn't support the fact that that cuts are going to come into the market anytime soon, especially given the fact that oil's spiking and potentially a resurgence of inflation. So it feels like it's a clear risk-off environment for the time being, and it started to show up in terms of the number of stocks making 52-week lows. It spiked 74% yesterday, so a clear move to the upside. Everything else is relatively flat in terms of number of stocks making 1 month highs and number of stocks making 52-week highs, but notably the number of stocks above their 20-day moving average is clearly below its 50 midpoint now. So a clear deterioration in stocks holding those lower time frame moving averages, so implying that they're starting to roll over, they're starting to break down. Typically in an uptrend, I want to be seeing those stocks hold those 20-day moving averages, and the fact that they're not, alongside everything else that I'm seeing, it's clear to me that strength is, or the bears are in control, and strength is just not there. So coming into the market open today, I'm just going to sit on my hands, be patient, and just keep an eye out for any signs of strength to reveal themselves. Yesterday, I did notice that there were a few names that have been holding up well and showing relative strength. So these are going to be the ones to watch. AMD, for example, SNDK, all kind of pushing higher or holding the moves that they've made despite the selling that's come into the indices. So there's definitely things to be monitoring in terms of what these stocks are doing as the major indices roll over. But yeah, for now, I'm just going to remain patient, sit on my hands, and wait for brighter days.